More about Citadel. So one of our core strategies is market neutral, running market neutral. So I want to know, how much do you know about that strategy and what you see as the benefits of that strategy compared to other shops?
Yeah, happy to answer that. So they've done a bit of research into the platform and into the market neutral strategy. And that's really one of the major reasons why I want to work at Citadel is because of that platform. And so just to kind of explain it, the way I think about it is hedge funds overall are trying to beat the market, right? They're trying to generate low beta returns. And by low beta, I mean, yeah, returns that are independent of the market. Because if a fund is generating returns that mirror the S&P, then as an investor, I'm better off just investing in a low cost index rather than paying a hedge fund, 20% of my returns. So a market neutral strategy essentially attempts to generate alpha regardless of the broader market. And kind of the two key components of that are gross exposure and net exposure. If you think about net exposure, it's your long positions minus your short positions. So if I'm long 100 million and I'm short 20 million, my net exposure is 80 million or 80, I'm 80% net long, which means that if the market goes up 10%, I can expect to be up 8%, right? But market neutral is your longs minus your shorts equals zero. So if I'm long 100, I have to then find a correlating stock to also short so that my short is also 100 so that my market exposure is effectively zero. My book doesn't move along with the market. And in that model, the gains come from leverage, which is you basically if my longs equal my shorts, I'm gaining on the leverage that I'm taking. So my gross exposure is my longs plus my shorts. If I'm long 100 and I'm short 100, my gross exposure is 200 million, meaning my leverage is 2x. So any portfolio return is magnified by 2x. And so it really encourages having to really pick the right ideas because those returns are magnified. The risk of that model is that if you're wrong, you're wrong very like much on the downside. But again, it's about picking like the right stocks and the right ideas winning out.